So one of the most common questions I get asked is, Carter, how can I turn $1,000 into over $10,000? And that's what we're going to be breaking down, the mindset and strategy that I would recommend for swing trading to grow a small account. So I hope you guys all enjoyed this video. If you guys do, hit that like button, subscribe, and if you guys want to learn more about swing trading, I just released a brand new swing trading course where we talk about how I find stocks, my strategy, my mindset, the psychology of a trader. There's quizzes, group chats. It's super awesome. I'll put that down below, and you guys can use code YouTube to get 20% off. So make sure you check that out. That's down below, but let's dive into this. I hope you guys enjoy it. So like I said, one of the most common questions that I get asked on my channel is, Carter, I have $1,000, but how can I grow this consistently and fast? If you're already thinking that this is a get rich quick scheme or it's a super easy, fast way to make money, sorry to say it, but you're completely wrong. Swing trading is a career. It could take you years to develop a strategy and mindset and grow your account. And if you're thinking that this is an easy way to make money, unfortunately, it's not. That doesn't mean it's not doable, it just means get ready to work. Now, the first thing that I would recommend doing in order to grow a small account is work on a strategy. Now, during this period, what I would recommend opening is something called a paper trading account. Paper trading is using simulated money to develop a strategy and mindset. The reason why is because you want to experiment, you want to practice. It's like a doctor trying to become a doctor or an engineer trying to become an engineer. It's going to take you some time to develop that strategy, to work on it. You're going to need education and practice. Now, personally, I would recommend doing this for as long as you can, anywhere from 6 months to a year. The reason why is because you need to be an expert in all things swing trading. You need to understand technical analysis. You need to understand how you find stocks, the psychology, your risk management structure, your profit structure, all of that. It's all super important with your strategy. Now, after you do that, now this is where things start getting fun, because now you can actually fund your account. Now, if you guys are trying to fund your account with a small amount of money, anything under $1,000, there is some things that I would recommend doing and understanding beforehand. The first thing goes without saying, have realistic expectations. If you're only funding your account with like $100, don't expect to make $100 every single day. It's going to be virtually impossible, and you're going to be very disappointed. You're going to start choosing quantity stocks rather than quality stocks. And that's just a fast track to lose money. Now, another thing you need to realize, if you guys only have $100 and you're making $1 or $10 a day, the only thing that's separating you from making more money is going to be one thing, and that's share size and your account size. Once you develop a strategy, it's just a matter of time before you start growing it, because all the money you make as profit can be used as leverage. This is what we call compound interest. So the money you make as profit can be used as leverage tomorrow to grow your account even more. But like I said, if you're making $1 a day, the only thing that's stopping you from making $1,000 a day is your account size. So starting out, once you realize and understand your strategy and you start making money, don't get discouraged that it's not a lot of money. Just trust the process of compound interest. All right, now that we understand that stuff, now let's turn and look at the strategy that I love. Let's turn to the computer. All right, so this is a recent swing trade that I recently just did on the one, the only Google. Now, the reason why I absolutely love it is because Google has this great upward trend. So we see a lot of buying pressure with Google, especially recently. Now, looking here, you guys will see this red line. This red line represents heavy support for Google. This red line is a moving average line. It's actually the 200-day moving average line. So what this does is it merges the past 200 days closing prices together, and it forms this line. When the stock is above it, it has a tendency of using it as support, so where we get a lot of buying pressure at. Now, when the stock's below it, it sees a tendency of seeing resistance, which is just the complete opposite, and that's selling pressure. So looking at it here, you guys will see that Google had a tendency of using it as support, right? It came and hit it pretty much about 4 times, representing a very hard support for Google stock. Now, when Google released their earnings wasn't actually that bad. They just missed on some cloud revenue, which in the grand scheme of things isn't that big of a deal. In any action in the market, in most cases, is an overreaction. So looking at it here, the stock got annihilated, went from 140 all the way down to 122. And like I said, that red line is support. So what I did is I hopped in near and around 123. This represent heavy support, setting my stop loss pretty much right below this red line, near and around 119 to 115. So pretty much risking about possibly $5, anywhere from $5 to $6 to possibly have this come back up to about 134. That is my overall first profit right now. It's at about 132. So we're risking about $5 to possibly make over, we can say $10 or $11, which is about a 2-to-1 risk and reward, which is absolutely fantastic. Now, obviously, you guys can adjust the stop loss, and this will ultimately adjust your risk tolerance. So you could be a little tighter at about 119. So now you're risking about $3 or $4 to make $10 or $12, which is a 3-to-1 risk and reward. Now, the first thing I understood when looking at this stock, obviously, is this upward trend. The second is going to be my entry. I wanted to get it near and around this 200-day moving average line as close as possible. So I got in about 123. Obviously, as this stock continues to move up, we are adjusting my stop loss. As of right now, I did move it below that 90-day moving average line, hoping to sell out near and around 134. But if we do get some sell-off, that's completely fine because I adjusted my stop loss. But I definitely think we'll see a little more buying pressure in the next couple of days. But either way, this is an easy basic strategy that I would recommend for all types of traders, whether you're a beginner, intermediate, expert. Another good one here, and we'll just do one more, is on VIST here. You guys will see, we see a tendency of getting support at about $25. It came in contact, several times, establishing very, very hard support for VIST. You guys will see we had that major sell-off right down to that support, and now we're getting a push back up. This is another easy example of basic support, basic resistance, and how you guys can use it to grow your account. It's super simple. I always want to make sure that the stock does have an upward trend, just like such. This is super important because we need to understand that there's a lot of buying pressure involved with this company, but this is just an easy example on how you guys can grow your account. So guys, I hope you guys all enjoyed this video. If you guys did, hit that like button, subscribe. Don't forget to check out my new swing trading course, and don't forget to use code YouTube to get 20% off. But we'll see you guys later. Remember to hit that like button, subscribe, and we'll see you guys in the next one. Take care.